So today we're going over two trades that I took for my new 50K evaluations with Take Profit Trader. So right here we're actually looking at going long when this inversion fair value gap that I've mapped out, when that plays out. And right now, if you can see the Fibonacci retracement, I have this set to map out the leg that I'm looking at. So it looks like it had retraced down into a 1 hour fair value gap. If you can see that blue area underneath, that is a 1 hour fair value gap. And it took out some liquidity on the left side that I didn't end up marking out. However, what we're doing right now is waiting for that inversion fair value gap around the 50% mark of the leg that we're looking at. So around the 50% mark, we're looking for it to essentially give us confirmation to go long. Now, I'm only going to take it up to the 75% mark of this leg. That's been a strategy that I've been doing for a while. I don't typically take it all the way up to 100%. So I typically end up trying to take a position if it presents itself at or around the 50% mark up to the 75% mark. So right here, there's no trade yet. Nothing has, given us an entry or confirmation to go long. We're just waiting. And right about here is when I start thinking, what's happening. It's about 10:20. If it doesn't give us an entry in the next 10 minutes, then probably, that'll probably be it for today. But right here on this bar, I'm waiting to see if the body of the candle closes above. And if it does, I go long. So right here, it closes at about 75% within the fair value gap, so I end up going long. I set my stop 100 points down, and then I set my profit 100 points up for a 1-to-1 risk to reward ratio. Now, some people, or a lot of people, get caught up in, having multiple RRs, like a 1-to-2 RR, 1-to-3 RR. However, for me, I've been the most profitable with a straight 1-to-1 risk to reward. And the reason being is because typically the traders that do multiple RRs, let's say they do like a 3-to-1 RR, they typically end up taking partials at the first, at one RR, right? So where I'm taking full profits, they're taking their partials. And when you do that, it actually ends up messing up the math with, how much you risk and what your reward is, and it ends up messing up your profitability long term. So I opt to take the entire portion of the trade off at 1 RR. Now here in the trade, going back to the trade, we actually dropped down pretty steeply, but it's very important to not be scared and to just let the trade play out. So here, one candle comes down pretty quickly. I think that was about 50 points, and then the next green candle just went up for another 50 points, which is pretty insane. The market volatility right now is a lot of fun, but it can be very crazy, especially if you're a newer trader. Even experienced traders are, some of them are having a little bit of trouble with this market. Definitely something to adjust to. But right here, in terms of my trade, it's looking pretty good. We just had two huge green candles come up to close above that last swing point on the 1 minute. So in my mind right here, this trade is looking pretty good in terms of hitting my price target. So right here, we're just waiting, right? We're just waiting. I don't have my finger on the button to exit the trade early. I'm going to let it play out. What I actually do and practice is that as soon as I click the button to buy or sell and I'm into a trade and everything is set, everything's working perfectly, I take my hands off of the desk and I just put them, above my head. Sometimes I'll get up and walk around, and I'll just let the trade play out. That is one of the big tips that I'll give to newer traders is that you gotta let your trade play out. And if you're sitting there getting scared, finger on the exit button or the sell button, just in case the trade goes south, you know, you gotta let your trade play out and trust that you made the right decision, or maybe you analyzed it correctly. Whatever it is, you gotta let the trade play out. So actually, right here on the trade, it tapped into the 75% mark, and this is actually where I started wondering maybe I should have put the sell limit at the 75% mark. But at this point, I just say, whatever. I'll just see if I can get that extra. I think it's like 10 points, right? Extra 10 points just to give me that clean 100-point move. And price goes back up, and I think it just barely touches it. Let's see. Right there is where I actually start sweating a little bit, not gonna lie, because it came up, swept again, and didn't hit my price target. So, actually, right here, I did get a little bit lucky, and that actually ended up being the high point of the day. So here we're actually in another trade. I think this one. So this one is actually in the afternoon. This one is a 15-minute inversion fair value gap. Again, at around the 50% mark of that leg, if you can see that. And this strategy works on a bunch of time frames, essentially, a lot of time frames. And right now I'm just waiting for the trade to execute, waiting for price to come back down and hit that limit order. But sitting pretty nice right now. I feel pretty good about the day. It's always good to start the day in profits. Sometimes I only take one trade. Sometimes I take multiple. It just depends on what the market is presenting me at the time. And right here, we're still just waiting for that buy limit to execute. And here we go. We are in. And if you can tell, my sell limit and stop limits, they look kind of close together, but it's actually 100 points up and down. So what I'm actually doing is I'm playing the retest of the inverse fair value gap at around the 50% mark of that leg, and I'm just taking it back up 100 points. So I'm not taking this one all the way up to the 75% mark of that huge 1 hour leg. I'm just taking it 100 points up. So I'm going in the direction that I think it's going to go, and just using the Fibonacci retracements to figure out the direction. So I think this one was a quicker trade because there was a lot more volatility in the afternoon. That's what I actually noticed about this past week, was that the afternoons were actually better trading sessions than the morning sessions were. So, this is why I had confidence to take a second trade in the day during the afternoon. I typically like to take my trades in the morning, but if the market is presenting itself, I'll take them in the afternoon. And right here, this is a key example of a pretty clean setup. Really just letting this one play out. Quick 1-to-1. It's a 100-point play. And I believe right here is when it's going to quickly just tap into that and give us over $3,000 across all accounts right there.